Welcome to Real Estate for Real session where we share actionable real estate information. Last week we started discussing why do homeowners purchase insurance. We talked about not only knowing what insurance is, but we have to know what our coverages are. Not about paying the money, but what does your insurance cover? We said there are typical questions you as a consumer need to ask your insurance provider when you're trying to get insurance. And there's another question we ask. If you travel abroad and you get robbed of your personal effects, does the insurance policy cover this?
Yeah, so the insurance does just cover the house. Beyond covering the house, it covers your personal effects. So yes, your house is insured, your personal effects are also insured. And most insurances, homeowners insurances, covers you even if you have losses outside the home. So that's important. You ask your insurance agent, what does your policy cover? The more you ask, the more you know.
Yes.
And I talking about deductibles. Is that it?
Yes.
Okay.
People would ask, outside my monthly insurance premiums, do I have any additional cost to be responsible for?
So you don't think that, I paid my premium and that's it. No, the way insurance is structured, you as the consumer also has a part to play beyond paying your monthly premium. Maybe with your mortgage, or you paid out of pocket. But beyond that, when there's an event or an insured event, you participate some. And the technical term used for that is called the deductibles. So what kind of deductibles do we have, Ms. Lara?
So we have three kinds of deductibles. We have the all peril.
Okay.
And this deductible is the one the homeowner's financial responsibility is to contribute a part when it comes to repairs. And if an incident occurs, that means you have a part to bear.
So it's not just pay your premium, repair. You also have to have some out of pocket. So your insurance policy is a collaboration between the insurance company and the consumer. Both of you share the risk. So don't assume that because I paid my insurance, I'm home and dry. No, your deductible says how much you are meant to contribute. It could either be a fixed amount of money or a percentage. And what's the other type of deductible that we should look for in the policy?
Wind and hail.
Okay.
Wind and hail. This deductible is you pay. The homeowner pays when a claim is filed due to wind or hail.
Wind event or hail event. Yeah.
This may be higher than any other deductible for all other events. The reason for the high deductible might be because when the wind or hail happens, there are multiple customers that may be affected. So it's not as if it's only impacting your house, it's going to affect every other person around
the area. And also, people that live in areas that are close to the coast or close to areas where you possibly have a hail event or a wind event or hurricane, they tend to have a higher deductible when it comes to wind and storm because of the probability of the occurrence of that event. But as I said, talk to your insurance agent and they'll be able to give you more insights. So what else do we look at?
Speaking of people that live in the same location that are prone to wind or hail, you have named storm deductibles too. So in case of a named storm, you remember we had the hurricane burial, and people affected by this hurricane have deductibles to pay. We saw people's roof flying off, we saw different things. So the deductibles, the percentage of the deductible is determined by how much the homeowner is willing to pay as premium on the insurance.
So essentially, when your policy is being put together, your agent gives you different deductible levels, and your deductible level on each type of deductible, if it's the all perils, wind and hail, named storm, affects the amount of premium you pay. So some people say, look, I have the capacity, I'm wealthy, I want a high deductible. I want my deductible $20,000 because I know that if an event happens, I have enough resources to pay that higher portion. Then in that case, you share more risk with the insurance company. You have a higher deductible, share more risk, pay a lower premium. But as we say, the reason we buy the insurance is for the unforeseen. If you could foresee the future, some people might not just bother buying insurance. But since it's for the unforeseen, everybody to get insurance. If your home is paid for, you have a mortgage or not, what you need to do?
You still need to have an
Insurance. So, Lara, who are we?
We're Child One Realty. You can call us on 713-955-6171 on social media, YouTube, Instagram, and Facebook at Child One Realty.
And our website is www.tried1realty.com. We are primarily a real estate company. We sell real estate. We also provide information that helps the home. Thank you very much.